Hi everyone. We're going to cover the federal income tax forms, and we'll talk about each one according to the business structure. The first form that we'll talk about is the Form 1040, which most of you have probably been acquainted with at one point or another in your life. Every person that is subject to the filing requirements in the USA must file an individual income tax return. This includes all the citizens of the United States, as well as foreign nationals that may be subject to these taxes. So if you receive a W-2, you need to be aware that it could trigger up a requirement for you to file a 1040. You can also operate a proprietorship and report your income on a Schedule C. We're going to talk about that later. You could receive partnership income as a partner. You could receive passive income, such as from rental property. You can receive dividend income from a corporation. So this is not an exhaustive list by any means, and basically just provides a few examples of the various forms of income. The Form 1040 has shorter versions for people with simpler returns. So you could have a 1040A, a 1040EZ, you could have a 1040SR for senior citizens. You can be a foreign national and you may have to file a specific form 1040 for that. So everything just kind of depends on your particular circumstances. Let's take a closer look at page 1 of the Form 1040. This is what a lot of people call the long form, and we'll look at it a little bit closer. It includes a calculation of all the sources of income and losses for the taxpayer, as well as adjustments to the income to arrive at taxable income. You'll see that down here on line 15. You'll notice that income reported on W-2s are listed on line 1, not individually, but in the aggregate. So if you're filing a joint return and your spouse happens to get a W-2, you'll just add them together and put them on line 1A. And then you'll see the other items here listed one by one going down the list. You have lines for interest income, dividends, IRA and pension distributions, Social Security income, and capital gains and losses. Then we come to this line 8 for Schedule 1 items. This schedule will be explored later. Now on page 2 of Form 1040, we find the sections where we calculate our taxes, and those could be from the tax tables if if your taxable income is below $100,000, or the tax schedules if your income or taxable income is greater than $100,000. Once you calculate all of those, you have to add in some other items as listed here, and you come down to your total tax due. In the payments section, you show where withholding has been taken from your paychecks. That's reflected on Form 10 on the W-2. Some of your Forms 1099 will have taxes withheld. For example, some pension 1099s reflect withholding, and you'll reflect that here and attach the 1099. Then you have these other credits that you may avail of to offset your tax liability. You'll come down here to line 33 to show the total payments of the total credits and payments. On line 34, we come to the net amount. Either you overpaid or you underpaid. If you overpaid, you're entitled to a refund, and you can either take that refund and have it direct deposited into your checking account or savings account. You can have it applied to your next year's estimated tax. So there's a number of options you have on an overpayment. If you underpaid, then the IRS wants you to go ahead and settle up with them and send that money in. And so this is reflected on line 37. If you underpaid by a significant amount, you could owe a tax penalty by not paying enough during the course of the year. And there's a line there for calculating your tax penalty. I mentioned on Schedule 1040 that there was a line for the Schedule 1. Well, this is the Schedule 1, and it shows additional income that you may have received, and it shows all the various kinds of income that you may be entitled to. One would be if you run a sole proprietorship, you would attach a Schedule C, and we're going to cover that in a minute. You might have gains or losses from different kinds of property distributions. It could or dispositions. It could be that you sold some property or that some property was destroyed. A Schedule E, we won't cover that in great detail, but it covers items such as rental income, partnerships. In fact, if you are a partner in a partnership, you will receive a Schedule K-1 of a Form 1065, and that's prepared by the partnership, and then you get that K-1, and we'll cover those in a few minutes. You could also have a farm, and if you have a farm, then you'll report the farm income on Schedule F, and that'll be on line 6. If you receive unemployment compensation, that's covered. And so you have all of these various kinds of income, even jury duty, that you might receive pay for. Prizes and awards. So if you win the lottery, you have to report that here. At the end of the day, though, you total up all of these various sources of income, and on line 10, that's the aggregate of all the income, and you report that line 10 on your 1040. It carries over to line 8. Reflecting back on the Schedule C to the 1040 that carries over to Schedule 1, this is the form that you would fill out. Now, in the first section, obviously, it has identifying information such as the kind of business you have, your employer ID code, things of that nature. And then the first section that you start filling out in Part 1 is basically the income that you received, the sales, your cost of sales, deriving the gross profit, other types of income for the gross income. And then Section 2 or Part 2 is the expenses that you incurred in running that Schedule C business. It lists for you typical business expenses, but if you have expenses that are not listed here, then there's a place for you to just aggregate those on a separate sheet of paper and carry them over onto this form in the other column or the other space, and then you total it all up to get net income, and your net income from this form will carry over to the Schedule 1 on the Form 1040. If you are a partner in a partnership, the partnership itself reports its income on Form 1065. It doesn't file a 1040. Rather, it reports their income on this form, and then it will share with each of the partners a Schedule K-1 for their pro rata share of the partnership income. What's different about the partnership, what makes it unique, is that certain tax attributes are flowed through to the partners. The partnership itself is not taxed. Rather, the partners are taxed on their pro rata share of the partnership income at their individual tax rates. So just think about that for a minute. If you are in a 50-50 partnership with someone, you have to report 50% of that income, or the partnership income, on your personal tax return, and your partner has to do the same. It could be that your partner is in a higher tax bracket personally than you are, so they have to pay more tax on their partnership income than you do because they're in that higher tax bracket. The form looks similar to the Schedule C. It has first the income calculation, and then in the second section, the deductions or the expenses of running the partnership. And then any tax or payments made by the partnership to show any balance due. Now, again, I say that the partnership is not taxed on the income itself. So the taxes would be something that would be unique to this particular partnership, and we won't go into the various types of taxes. Now, the 1065 has 5 pages, so it could be very lengthy in terms of the kinds of disclosures that have to be made relative to the partnership, and each partner would have to be aware of those types of disclosures. Once the partnership calculates its income, it has to send a K-1, a Schedule K-1, to each of its partners. As you can see, certain items retain their tax attributes, such as credits and certain deductions. For example, if the partnership invests in machinery and claims an investment tax credit on that investment, then that investment flows through to the tax credit flows through to the partners relative to their ownership of the partnership. The partner will report these items on their Form 1040 as appropriate. Now, I mentioned before, it would be reported on Schedule E if you are if you're a partner. Then that flows through to the Schedule E, which then goes to Schedule 1, which then goes to the 1040. A little bit complicated. You can think of the K-1 as something akin to the W-2 from an employer. Finally, we come to the tax returns for a corporation. Now, the Form 1120 is the basic form for a corporation, and if it's just a plain vanilla corporation that doesn't claim any special status, then we call this a C corporation. It's a self-contained entity, legal entity. It calculates its own income and taxes, and it doesn't report or it doesn't flow this income through to its shareholders. Rather, the shareholders derive income from the corporation when they declare a dividend. Now, other forms of the corporations may be an S corporation. Legally it is a corporation, but it acts like a partnership. It flows the information through to its shareholders, just like a partnership does. It doesn't pay taxes. You can have holding companies, professional corporations. A lot of times professionals will form a corporation and they will be the shareholders. That could be a partner. That could be, say, accountants or a law firm. Could be doctors that form this PC is what they call themselves. There's a lot of other types of corporations, but right now we're just going to focus on the C Corp. It follows the same pattern of behavior as others that we've seen. It's set up like an income statement. So the first section is the income section, coming down to the total income. The second section will be the expenses and deductions. And then the third section is the calculation of the taxable income and the taxes that must be paid by the corporation. If they have sent money in and they have overpaid, then they may be entitled to a refund. If they have underpaid, then they will have to settle up with the IRS by sending them additional money. Now, this Form 1040, 1120, consists of 6 pages. All pages after this first page detail special tax provisions extended to corporations and certain disclosures required of corporations. The profits are retained by the corporation until they distribute those profits to the shareholders in the form of dividends, as I mentioned before. So our tax system has been criticized by a lot of folks for its double taxation of corporate profits. The profits are taxed once when the corporation earns it, and then again as dividends are paid to the shareholders. And so the dividends are taxed at the shareholder level when they are received. So the same profits have been taxed twice, and a lot of people think that that's unfair. The U.S. tax system is one of the most complex systems in the world. We've just touched on the most common tax returns and have noted that they all generally follow a common pattern with minor variations. However, there's an endless labyrinth of regulations and rules on special treatments of certain deductions, transactions, and reporting requirements. Some are industry specific, such as in the extractive industries, there's a deduction called depletion. This applies to the oil and gas industry, the mining industry, and the forestry business. Again, these are all extractive industries. Some are time sensitive. For example, you have to pay taxes on certain dates. You have to report on certain dates in order to avoid a penalty. While others are location specific. For example, you might avail of a very generous income exclusion if you work and live outside the country. We have also reflected only on the country's income tax, yet there are numerous other taxes imposed on estates, on gifts, on property values, that is, the ad valorem taxes such as school taxes, and excise taxes imposed on certain commodities such as gasoline, cigarettes, alcohol, gambling, high-value boats, cars, and jewelry. Some people call at least some of these taxes sin taxes. We also have severance taxes on the value of the oil or gas that is extracted from the ground. Transfer taxes, such as the taxes you pay when you purchase a car. And of course, we have Social Security taxes. Needless to say, those who practice in the field of taxes have plenty of opportunity to earn a comfortable living, helping their clients navigate this tax system of ours. I hope you've enjoyed this presentation, and I hope you've gained some insight as to our tax code. Take care.